In the previous class, we discussed about the two different important markets, particularly the short term money market, which works in the financial system, that is your call money market, and we have the treasury bills market. Call money market is a interbank market, and the treasury bill market is basically a short term government securities market, through which the Reserve Bank of India tries to control the money supply in the economy as a whole. And there is an auction process which works for the pricing or the yield determination of the treasury bills. Apart from this treasury bills market and the call money market, we have other market which also work in this particular system. What are those markets? These markets include your commercial papers, it includes certificate of deposits, commercial bills, then you have a discount market. So, there are different type of other market also work in this particular system, and which are mostly related to short term securities. So, keeping those things in mind, we will be discussing all those markets, that how this market work and who are those participants in this market, what is the maximum term to maturity of the securities which are traded in this market, and who are those investors, and who are those major stakeholder, and what kind of responsibilities they play whenever we participate in this particular segments. So, these are the major things what we will be discussing in this session, which is basically known as the, we have named it that miscellaneous short term financial market, and those short term financial market, miscellaneous short term financial market also plays the role for raising the capital for the different entities, and as well as also play the role for the money supply in the economic system. So, then let us see that what is the first one? The first one is the commercial paper. What do you mean by a commercial paper? The commercial paper is an unsecured money market instrument, which is issued in the form of a promissory note by the corporation with high credit ratings to finance its short term needs. If you see that already you might have aware about this thing, whenever there is a company, the company basically try to raise the financing for the investment, financing for investments. So, whenever the company raises the money for financing the investments, and the financing is divided into two parts, your long term financing and you have the short term financing. The long term financing includes the, either they can raise the money from the banks or they can go for the long term bonds. But whenever you talk about the short term financing, here also they can raise from the money from the banks or the short term bonds. So, here one of the sources is basically your commercial paper. The commercial paper is basically a unsecured instrument. It is one thing you remember, that is unsecured. That means, whenever we raise the money through these commercial papers, we do not take any kind of collateral against that. That is why it is a unsecured money market instrument. And another thing also you can keep in the mind, with high credit ratings. That means, the companies who can issue this commercial paper, the rating of that, credit rating of that particular company should be very high. There are certain kind of limits in terms of the credit ratings which are given, and the particular company which has this kind of rating or more than that rating, those companies are able to raise the money through these commercial papers as a short term financing instruments. Then the CPs, basically if you see the commercial papers, these are issued in wide range of denominations. This can be either discounted, interest bearing, and usually have a limited secondary market. Commercial paper market in India is not very developed, and reasonably it is a new market. And the secondary market, all of you know that there are two segments of each market. We have a primary market, we have a secondary market. For investment point of view, the existence of the secondary market in the context of commercial papers is relatively very underdeveloped in comparison to its primary segment. And it is always can be either discounted and or the interest bearing. So, both ways this particular instrument is issued for the investment in this particular segment. That is what always you keep in the mind. So, this is the basic definition of commercial paper, and the objective already you know that why the commercial papers are issued. The commercial papers are issued only to financing the short term investments of the companies, and the corporations or companies with high credit ratings are eligible to issue these commercial papers. So, this is the definition or the nature of the commercial paper. Then we will see that what are those characteristics of this particular commercial paper. Commercial papers can be issued at discount to the face value or on a fixed interest rate basis. The particular instrument already can be issued at discount and redeemed at par, or it can be issued on a fixed interest rate basis. A minimum a fixed amount of interest rate can be charged whenever anybody invests in the commercial paper, and that is the way the money is basically raised from the market. And another characteristics we have, this is unsecured and this is also negotiable, and it has also a buyback facility. Buyback facility means the corporation who has issued this commercial paper, there is a possibility they can buy back that particular instrument, buy back that particular paper from this investor. So, it is unsecured, that means it does not carry any collateral, it is negotiable, and as well as there is a buyback facility involved in that, and it can be issued with discount or also it can be issued with a fixed interest rate basis. That is also possible for this particular instrument. So, that is why it is a source of short term debt, which is regarded as a highly safe, simple, flexible and quality liquid instrument. Why we call it as a liquid instrument? Because already you know that this is very much short term in nature. So, if it is short term in nature, then liquidity means already you know how fast it can be easily converted into cash. So, the conversion to cash is very fast. So, as conversion to cash is very fast, what we can say, this is, that is why we call it is a quality liquid instrument, which can create the credit liquidity, which can create the liquidity in the market reasonably faster, and it is flexible and also the simple. There is no such kind of complexity for issuing this if this particular instrument or this particular company has the minimum amount of rating or the adequate amount of rating which is eligible or make them eligible to issue that particular security in the financial system. So, that is why these are the major characteristics of the commercial papers always we observe. Then we have to see that how this particular commercial papers are working in India. If you consider from the Indian point of view, this was introduced in 1990, that is why I said it is a reasonably new instrument in comparison to the other financial instruments which are traded in the market. And what was the objective? The objective was to enable the highly rated corporate borrowers to diversify their sources of short term borrowings, because the companies always issue the short term debts the companies issue the short term debts for financing their short term investments or the short term requirements. So, in this context what is happening? It is basically an additional instrument with the bank borrowings and other type of bonds what they issue to the market to raise the money for their investments in the future. So, that is why the commercial paper is considered as an additional borrowing instruments for the companies, and this is basically through that the corporate sector can diversify their short term securities or short term financing instruments to make their investments feasible or the possible. And it is also the primary dealers and all India financial institutions were also permitted to issue the commercial papers to enable them to meet their short term funding requirements for their operations. In India, there are certain primary dealers. In India, there are certain primary dealers and as well as the all India financial institutions. There are certain all India financial institutions who are also allowed to do the business to raise the money through the commercial paper. That is also possible in the Indian context. So, this is what basically the commercial paper is, and this is why basically the commercial paper is used in the market for this short term to fulfillment of the short term requirements of the companies for their short term investments. That is why if you see the summary, the corporates, primary dealers and all India financial institutions are eligible to issue the commercial papers in the market. This is what about the issuance of this particular security or who are eligible to issue that particular security in the Indian financial system. Then already we saw that there are certain guidelines. There are certain guidelines through which we can understand that which are those companies who can issue the commercial papers. Which are those companies who can issue the commercial papers? The first thing, there are certain kind of norms, there are certain kind of guidelines which are issued by the regulatory bodies to see that whether this particular company is able to meet those kind of norms, those kind of conditions, then only those kind of organizations, those kind of companies are able to issue that. What is the first one? The first one was the tangible net worth of the company as per the latest audited balance sheet should not be less than 4 crore. Remember, the tangible net worth of the company should not be less than 4 crore. That is the first point. Then these commercial papers can be issued in denominations of rupees 5 lakh or the multiples of that. The minimum denominations of the commercial papers is rupees 5 lakhs or the multiples of that. The fund based working capital of the company should not be less than 4 crore rupees. That is another one. This fund based working capital of the company should not be. What do you mean by the working capital? You know that the what do you mean by the working capital? The working capital means the short term capitals, the short term requirements of the companies, short term requirements of the companies. It can be the day to day expenses, inventories and all kinds of things which are coming under the working capital. So, the fund based working capital of the company should not be less than 4 crore, and every issue of commercial papers or including renewal should be treated as a fresh issue. Any kind of additions to the commercial paper is considered as a fresh issue, or even if the existing commercial papers, if it is again renewed second time or third time, that is also considered as the fresh issue in the market. And there is no lock in period for the CPs. The CPs have no lock in period. We know what do you mean by the lock in period. Whenever you invest in a particular security after a particular time period you cannot redeem it. For example, whenever you are investing in a particular kind of deposits or particular kind of instruments, up to 3 years or up to 2 years depending upon the type of instrument, if you even if you want, you cannot redeem that particular security and you can get back your money. But if in the case of the commercial papers, this particular instrument has no such lock in period. So, this is more or less more open and this can be redeemed or this can be basically again traded in the market at any point of time if the investor wants. So, that is the way basically the commercial papers are defined in India, and the companies who are eligible to issue this, they should have the minimum rating. They should have the minimum rating, that we will see that what kind of rating they need. So, the CP's maturity period is between minimum 7 days and maximum up to 1 year. Already we told you that the money market instruments in the system maximum maturity period is up to 1 year, in some cases it can go up to 3 years, but generally we consider the maturity period of the money market is up to 1 year from 1 day. 1 day to 1 year the maturity period varies. So, that is why in this context if you see, the CP can be issued for the maturity between 7 days to maximum up to 1 year, and this is basically started since October 2004. Who can invest in the CPs? Individuals, banking companies, other corporate bodies registered or incorporated in India, non-resident Indians, FIIs, everybody can invest in CPs if they want as a short term investment. The CPs basically are open to all type of entities, both retail, it is applicable or it is available for retail investor and as well as the institutional investors. It is available both retail investor and the institutional investor. If anybody wants to invest in that, then those kind of investors are eligible to invest in this kind of security. The total amount of commercial paper proposed to be issued should be raised within a period of 2 weeks from the date on which the issuer opens the issue for the subscription. So, maximum 2 weeks, are given to subscribe that particular issue to raise the money from the market. The total window period, if anybody wants to raise the money through the commercial papers, the total period will be given 15 days or the not 15 days, it is basically 2 weeks, and within that 2 weeks the issuance of that particular instrument will be over, then investor has to subscribe that issue within that particular stipulated period. And I was talking about the credit rating, the minimum rating what the company should have to issue the commercial paper, that is your, it shall be it should be P2 of the CRISIL and A2 for the ICRA. Different rating agencies give the different names for the rating. So, we were discussing about the different type of rating agencies which are existing in India. We have the CRISIL, we have the ICRA, we have the CARE. So, these are the major rating agencies which are functioning in the Indian financial system. So, if you go by those kind of rating agencies, the companies who are eligible to issue that particular kind of securities, that particular kind of instrument should have the minimum rating of P2 if it is issued by CRISIL, and it should be minimum A2 if it is issued by the ICRA. So, this is what basically about the who are those investors and what is the maturity period of the commercial papers and what is the subscription period of the commercial paper and what kind of minimum rating the company should have to issue the commercial papers in the market. So, this is the another certain features always we observe in the Indian context. Then here what is happening, whenever the commercial papers are issued, the companies always appoint one IPA, issuing and paying agent, for the issuance of the commercial paper, because all of you know that India is a bank dominated economy. Mostly all kind of payment transactions gateway we always use the banks. But any of the commercial banks are responsible to go for or is responsible for making the transactions related to that kind of instruments or that kind of trading. We always any scheduled commercial bank in the country is always act as an IPA. IPA means it is we refer to issuing and paying agency for issuance of the commercial paper. They are actively traded in the OTC market, over the counter market, and such transactions once it is traded in the OTC market, the particular transactions details has to be reported to the FIMDA reporting platform within 15 minutes of the trade, because that information or trade information should come to all market participants to make the market more transparent. If it is available in the FIMDA platform, then everybody has the idea that what kind of transactions, what is the demand and supply in that particular segment, everything would be clear whenever it comes to the FIMDA platform. So, because of that, even if this particular trading takes place in the OTC market, the information has to come to the FIMDA trading platform within the 15 days. The CPs can be held in the physical form and the CPs also can be held in the demat form. We can have a demat account to invest in the commercial papers. We can also invest in the CPs in terms of the physical bond. So, if the CPs are in the physical form, then the holder of the commercial papers always present this instrument for payment to the issuer through the IPA. For example, if the company A has issued that particular commercial paper and bank is the B, then the investor is the I. Then for if this I is holding that thing in the physical form, then the I has to contact the B for any kind of transactions and B will deal with the A. Investor will go to the bank which is act as IPA and the IPA deals with the company, and because IPA is basically recruited by or maybe chosen by the company A, who always does this IPA business or IPA activities on behalf of the company A. So, this kind of transactions are all done through the bank B and the investor always contacts the IPA for any kind of payment or any kind of repayment of that particular transactions of that particular security. If the IPA is held in the demat form, again the holder of the CP will have to get it redeemed through the depository and receive the payment from the IPA. The depository agencies are responsible for redemption of that, but the payment again come through the commercial bank who is acting as an IPA for that particular company who has issued that particular commercial paper. So, because of that it can be, that means here what we have seen, the commercial papers can be held in terms of the physical asset or a physical bond, or it also can be held as a demat form, and the IPA plays a significant role or is an intermediary between the investors and the issuer for any kind of transactions which may happen in the market. So, this is about the kind of how the transactions happen in this particular segment. Then what is this? What is the role of the issuer? What the issuer has to do? The issuer always, first of all, for any kind of transactions if the issuer wants to do with respect to CP or the commercial paper, the first job of the issuer is they should appoint an IPA or issuing and paying agency, and the issuer also should disclose to the potential investors its financial position as per the standard market practice. What does it mean? The issuer should say that make this balance sheet public, all kind of profitability, ratios, structure of the board, everything, all kind of market disclosure which are required. So, everything has to be always made public, and the investor will get the idea that what kind of company it is, and also the credit rating, whatever rating the company has. So, everything will be reported or everything will be informed to the potential investor. And after the exchange of deal confirmation between the issuer, between the investor and the issuer, the issuing company always issue the physical certificate to the investor or arrange for crediting the commercial paper to the investor's account with the depository if it is in the demat form. So, this is the job of the responsibility of the issuer. Whenever any kind of major thing is, they have to appoint an IPA and they have to disclose their all the financial data or the financial information to the public, to the potential investor for transparency, making this particular system transparent. So, this is what the responsibility of the issuer. Then we have the what are those responsibility of the IPA? The IPA always ensure that the issuer has the minimum credit rating as stipulated by RBI to issue that particular IPO. They should also ensure that the amount mobilized to the issuance of CP is within the limit indicated by the CRA, credit rating agency, for the specified rating, or as approved by the board of directors, whichever is lower. Then IPA also has the responsibility to verify all the documents submitted by the issuer, like copy of the board resolution, signature of the authorized executives, and issue a certificate that documents are in order, and is also certify that it has a valid agreement with the issuer. They should have a valid agreement with the issuer, and the issuer fulfills all the criteria for the issuance of commercial papers. That is the responsibility of the IPA. And the certified copies of the original documents verified by the IPA should be held in the custody of the IPA. Everything is basically, the IPA is the mediating agency which works between the issuer and the investor in the CP market. Then there is a responsibility of the credit rating agency. They have a very strong role. The code of conduct prescribed by the SEBI for undertaking the rating of capital market instruments shall be applicable to them for all kind of rating of the CPs. They have the credit rating agencies have the discretion to determine the validity period of the rating depending upon its perception about the strength of the issuer. Accordingly, they shall at the time of rating clearly indicate that when the rating is due is review. For example, the particular thing is issued on let some date and the rating is valid up to 1 year, or rating is valid up to let 6 months, and the issuance, the issuer is trying to make this particular maturity period 1 year, they cannot do that. The reason is the validity period of the credit rating is basically up to 1 year, up to 6 months. So, because of that, because the validity period is 6 months, the maximum maturity period of the CP cannot be 1 year. So, the credit rating will say that when the next review is over, and this is the responsibility of the investor and the IPA to see that whether this particular rating is valid for the company up to the maturity period of that particular security. That is why the CRA can decide the validity period of the credit rating, and the credit rating agencies would have to closely monitor the rating assigned to the issuer vis-a-vis their track record at regular intervals, and would be required to make its revision in the ratings public through its publications and websites. Over the period of time, from time to time, they always disclose then what kind of rating the company has and whether there is a change in the rating, etc. Then if you see overall that what are those factors which are affecting the development of the CP market, we have the credit quality. Always we have seen that credit rating is the major factor which decides whether the company can issue the CP or not, and credit rating also attracts the investor to invest in that particular security if it is issued by a particular issuing agent or issuing company. Market liquidity, if liquidity is less in the market, that has the impact on, because it is very difficult to raise the money from the market. That time maybe the company can take the help from the CPs to raise the money from the market for the short term reasons. What are the cost of other alternative assets for financing the short term requirements? If the cost of other instruments are relatively less, the company may not go for using the CP as a alternative instrument or alternative borrowing instruments for them. Financial market infrastructure means how far the market is or the infrastructural development is there for the trading in that particular type of instruments. If it is very highly developed, then it is easier to invest in this kind of security. And the working capital limit of this particular company, that is also one of the another factors which decide that how much money they need for the working capital requirements. So, these are the different factors which are affecting the development of the CP market in India. So, this is about the brief idea about the commercial papers. Then we can move on to the other markets like CDs and all these things in the next session. Please go through this particular references for this particular session. Thank you.